Okay, Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. So this is a recording to discuss on exercises on chapter 7. Okay, firstly, we are going to cover chapter 7, and in the next recording, we're going to cover chapter 8 exercises. Okay, now, since we already did question number 1, chapter 7, question number 1, page 145, okay, go to page 145, okay. We have done that in class, at least part of it, and I require you to complete the whole question by yourself. Okay, so in this session, we are going to begin with question number 2. Okay, question number 2, page 145. Okay, now let's begin. The trial balance of Marwan Sdn Berhad for 31st December 2003 of the current year includes, among other items, the following account balances. So firstly, what we have here is the account balances, which is a very normal way of starting a question. Okay, and next page, if you refer to the next page, we have a bunch of additional information. Okay, six altogether. And then let's look at the required of us. What is required? Okay, now prepare the adjusting entries for 31st December, assuming adjusting entries are prepared only at year end. Okay, now for this one, you have to make sure that you know what to do exactly, because if you did the right thing, if you do the wrong thing, you won't get any marks at all. Okay, so for a typical questions in this chapter, students usually automatically would think that, okay, what is required? We have to open the accounts. But in this question, that's not the case. Okay, when it says prepare the adjusting entries, it means here we are talking about the journal entries. Okay, so before I help you, we're going to start with the first question, but I'm going to help you to try to make things a lot easier for you. Okay, now let's look at the first additional information. Part of the supplies represented by the 12,000 ringgit balance of the office supplies accounts. Okay, firstly, let's look at the balances. Refer to stock of supplies. Okay, in the table, refer to the stock of supplies, debit 12,000 ringgit. Okay, because it is debited and it carries the name stock, the term stock. Okay, so we know that it is an asset. Okay, stock of supplies is an asset. Okay, now part of the supplies has been consumed. Okay, look back at the additional information number 1. Okay, part of this 12,000 ringgit has been consumed. Okay, now an inventory count of the supplies on hand on 31st December total 4,800 ringgit. What does it mean? It means that at the end of the year, 31st December, we do a count. Okay, we count how much supplies do we have in our stock. And the count reveals a balance of 4,800 ringgit. So in this case, okay, let's extract the information. Okay, we start with a balance. Okay, one thing about doing journal entry is that I think this is the positive side of it, is that you don't have to open the accounts to extract all the information. Okay, so we can just write notes like this. Okay, so the balance BD is 12,000 ringgit. Right, now the balance CD is 4,800 ringgit. The balance CD is the balance at the end of the year, which is the balance after they do the stock count. They count the stock, how much is left? That is 4,800 ringgit. So first thing first, you need to know how to extract information from the question. Okay, so this is the information extracted. Now, our focus here, firstly, is this one. Okay, number 2, we want to find how much is consumed. Okay, so the amount consumed was the difference between the two, right? So this is the amount consumed. Okay, now here we are talking about the accounts called stock of supplies. Okay, stock of supplies, as we said earlier, it is an asset account. And when we consume this amount. Okay, when we consume this amount, what happened to stock of supplies? We have to ask this question: was it increased or decreased? Okay, So in this case, obviously, because the balance CD is lower than the balance BD, also in the question it states that a part of the supplies has been consumed. Okay, so it means that the stock of supplies has decreased. Okay, and when an asset decrease, stock of supplies is an asset. When it is decreased, should we debit or credit the account? The journal entry would be credited, right? Okay, so in this case, we know that the stock of supplies will be credited. Okay, now what is the next thing that we have to figure out? The amount, right? Okay, so in this case, we only credit the consume amount. Okay, not the balance CD, but the consume amount. Okay, so in this case, 7,200 ringgit. Okay, so we have the credit here. What would be the debit? The debit would be, okay, now, whenever we consume our assets, it will be expense off. It becomes an expenses. Okay, so in this case, the stock of supplies will become supplies expenses. Okay, and because it is expenses, we know expenses always be on debit side. Okay, this confirm our check. Okay, this is an expenses, supplies expenses. Okay, so the account is correct, so we have the credit as well. So that's it for the journal entry number one. All right, I hope this is clear for you. Now, in case you can't really understand this, okay, the alternative, okay, what's the alternative is that you can open the account very quickly, because remember, this is not the requirement of the question. Okay, the question require us to do journal entry. Okay, but if let's say you think your mind works better by opening ledgers first, do it very quickly. Okay, so the 1st January balance BD, that would be 12,000 ringgit. Okay, and then 31st December, that would be our balance CD, 4,800 ringgit. Okay, so here we have 12,000 ringgit divide minus 4,800 ringgit. Okay, in this case, this becomes supplies expenses. Okay, and then you can just close your account. If let's say you feel this is the balancing figure, okay, you fill this up later. Okay, let's say we do this the regular way. Okay, we close the account, so this is the balancing figure, right? Okay, so we get 7,200 ringgit, and then we are going to open supplies, oops, sorry, supplies expenses immediately. Okay, so you see here in the stock of supplies is on credit, so supplies expenses, obviously it will be on debit side. Okay, and remember, because the name is supplies expenses, we cannot write supplies expenses here. Okay, so we write down stock of supplies. Okay, and the amount would be this exact amount. Now, okay, I want to direct your attention to this counts. Okay, look at the stock of supplies. This is the journal entry. It appears on credit side. And for supplies expenses, this is the journal entries. It appears on the debit side. So what we do is, okay, the journal entry is debit. Okay, look at the account. Which account has the debit side recording? Supplies expenses, right? Okay, debit supplies expenses, and with that exact amount, 7,200 ringgit, and then we are going to credit, okay, the accounts that contains the credit entry. In this case, stock of supplies. Credit stock of supplies, stock of supplies, 7,200 ringgit. Okay, so this is another method. If, for example, you can't really come up with the journal entry straight away from the question, what can you do is open the accounts very quickly and extract the relevant entry. Okay, in this case, refer to the yellow. Okay, and it will be exactly the same. Okay, you see here, debit supplies expenses, 7,200 ringgit. Both are actually the same. Okay, just a matter of preference, how you would want to do this. Okay, now let's move on to the second question. The rental payment of 50,400 ringgit was made on 1st May 2000X3, and the amount is for 12 months rent. Okay, so as usual, Okay, let's break down this information into manageable chunks. Okay, the rental payment amounting 50,400 ringgit. This is the total. Okay, let's use a new sheet. Okay, okay. Rental. Okay, the amount is 50,400 ringgit. This is, by the way, is the annual amount. Okay, for 12 months. Okay, this is for 12 months. And first thing first, let's find the monthly rental. Okay, because in this chapter, we always manipulate the question by using these periodical differences. So usually it would be expressed in months. Okay, so we take this total amount divide by 12 months. So this would be the monthly rental is 4,200 ringgit. Now look at the question. Okay, the payment was made on 1st May. Okay, so here, um, oops, uh, general, 1st May. Yep. Okay, let me format this first. June, July, August, September. Um, let's put it here. Okay, because we can do this, right? So, okay, maybe make it a bit bigger. All right, looks better now. Okay, now, we make the payment beginning May, right? Okay, this is the beginning of the payment. Okay, and we close our accounts on 31st December. Okay, this is the end of the account. Okay, so what we need to do is we have to calculate how many months is covered by this particular year, right? So let's say this is the first month, and then this would be the second month. Okay, and then altogether 8 months. Okay, that makes, oh, I think I have one extra month here. Okay, so this extra 4 months would be, what we call this? This would be prepayments, right? Okay, we paid. Okay, we paid in advance. Okay, so we have to, okay, refer to the table prepaid rent. Okay, prepaid rent is an asset. Okay, this is another thing. You have to know the classification. Okay, prepaid expenses is an asset. So prepaid rent, the normal balance, okay, would be a debit balance because it is an asset. Okay, now for the amount, it's 50,400 ringgit. And this 8 months, okay, after we close the account, this 8 month payment, okay, to get all together 12 months is this 50,400 ringgit. This 8 month payment, okay, we call this as already expired. Okay, the term expired is a valid term in this chapter. Okay, so whenever you see in the question, okay, the payment has expired. What does it mean? It means that the prepayments has expired. Okay, has passed its due date. So in this case, when it is expired, we have to take out from the asset, right? So if we want to take out from the asset, that means we have to reduce this. Okay, to reduce an asset account, what do? Is we have to credit, right? Okay, we have to credit the account. So in this case, we have credit prepaid rent. Okay, by the way, okay, by how much? This is another focus. How much do we credit? It refers to how many months has expired. In this case, 8 months of rent has expired. So we take 8 months times the monthly rental that gives us, right, okay, 33,600 ringgit. Okay, let's put it here. Okay, 33,600 ringgit. So this is the amount that we need to take out from prepaid rent account. Okay, the assets account. Now, 33,600 ringgit. And we already have the credit here. The next is the debit. Now, prepaid rent, when it expired, it becomes it expenses counterpart because this is we are paying the rent. Okay, so it becomes expenses. So in this case, debit rent expense. Okay, and then just write down the amount, 32,600 ringgit. And look at here, debit is rent expense. Rent expense, fulfill the check. Okay, expense account should be debited. So here we have uh, rent expense. Right? Okay, so this is the journal entry. Okay, next. I hope you understand this. Okay, next, number three, the salary expense of 48,000 does not include 12,000 ringgit of unpaid salaries incurred since the last payday. Okay, what does it mean? Okay, look at the table. The table salary expense, okay, not prepaid salaries, not accrued salaries or salaries payable. Okay, it says here salaries expense of 48,000. This amount, 48,000, does not include 12,000 ringgit of unpaid salaries. So here what we have is unpaid salaries. Okay, unpaid expenses means expenses payable. Okay, so if it is unpaid, it doesn't include yet the existing payment, doesn't include the unpaid portion. What we need to do is we need to add to the portion. Okay, so salaries expense, in other words, okay, right now what we have here is salaries expense amounting to 48,000. Okay, but the question said that, okay, the unpaid is unpaid is 12,000 ringgit. Okay, so the amount that we're supposed to pay per year is actually 60,000 ringgit. Okay, the total. Okay, the total is 60,000 ringgit. You see? Okay, now we need to add this to the salaries expense. Expenses, salary expenses account, it is an expenses account. Okay, so it when we want to add to the account, it should be debited. Okay, so here debit salaries expenses, okay, amounting to 12,000 ringgit, only the amount that we want to add. Okay, only the amount that we want to add. And this is credit salaries payable. Okay, the same amount, 12,000 ringgit. Okay, now, oops, sorry. Okay, now we can do a quick check. Salaries payable is a liability because we owe money to our employees. It is our liability. Okay, so it makes sense that it is on credit side. Okay, it passed the check. Okay. All right, next. Next, number four, delivery services of 6,000 ringgit were performed for a customer, but a bill has not been sent yet. Okay. What happened here is we have performed the service. Okay. So we should get paid, but we haven't sent the bill yet, which means we haven't get paid yet. So in this case, this is a types of accruals. Okay. More accurately, more specifically, this is what we call as revenue receivable. Okay, yeah, it's exactly a revenue receivable. Okay, wait, yeah. Okay, now for the revenue receivable, okay, the only okay, here we have delivery fee revenue. Sorry. So what we have here is we should use the full term delivery fee. Oops, delivery fee receivable. Okay, so this is what we need. This is the adjustments. Okay, now, and because it is an accruals, this is an accruals. Revenue receivable. This is also an asset. Okay, so because it is an asset, it should be debited. Okay, just making the notes here. Okay, now let's look at the question. Okay, delivery fee revenue amounting to 80,000 ringgit on credit side. What does it mean? It means that this is the amount that we have recorded in our account. Okay, 80,000 ringgit. Okay, and we want to increase this amount. Okay, why? Because the question states that the 12,000 ringgit, sorry, not 12,000 ringgit, 6,000 ringgit, number four, yeah. Okay, the bill hasn't been sent yet. Okay, so which means if we haven't sent the bill, it means that we haven't record in our account yet. So we have to record, and to record this, to increase the revenue, it should be credited. So we already solved the first part. It is accrual, asides, and debit. So debit, delivery fee receivable amounting to 6,000 ringgit, and then credit, delivery fee revenue 6,000 ringgit. Okay, so this is the fourth adjustment. Okay, next, number five. Of the unearned commission income of 12,000 ringgit, 40,000 was earned on 31st December. Okay, so what does it mean? Look at the table, unearned commission revenue. Okay, what does unearned commission revenue means? Unearned commission revenue means, okay, focus on the unearned part. It means that we have received the commission revenue, but we haven't earned them yet. What does it mean? It means that we have received in advance. Okay, we received the commission in advance, but in reality, we haven't done anything to earn that commission yet. Okay, so because we receive in advance, it's like we owe the works to the payer. So in this case, it is a liability. All right. That's why if you look at the question, unearned commission revenue is on credit side, 20,000 ringgit. So it is a liability because it is on credit. Now, it says in the adjustment, okay, of the amount, 20,000 ringgit, 40% was earned, meaning to say we have to take out, okay, 40% of the amount from the account, from the unearned commission revenue. So to take out from a liability account, liability is a credit, so we are practically reducing the account, so we have to debit. So in this case, the journal entry is debit unearned commission revenue by exactly 40% of 20,000 ringgit. Okay. So here we got 8,000, right? And then credit, it becomes commission revenue. Okay, it becomes commission revenue and exactly the same amount, 8,000 ringgit. All right. Okay. So that is number five. And number six, the long-term loan is dated June 1st. Okay, so our loan is dated on 1st June. Oops. So loan is 1st June. It is a loan from Bank Muamalat Bank at 12% interest per annum. Huh? An Islamic bank charging interest, right? So the amount is 50,000 ringgit, and the interest per year, okay, per year is 12% times 50,000. Okay, so the interest is 6,000 per year, which means, okay, so this is annual interest. Now we need to find the interest for the monthly amount. So we take this, divide by 12 months. So per month is 500 ringgit. Okay, so we're going to do this exact timeline. But here we start with the loan is dated June. Okay, so here this is June. Okay, so this June. Right. Now, the business needs to pay the interest beginning June. Okay, and it is for 12 months. This 6,000 ringgit, okay, is practically 500 ringgit per month. for over 12 months period, which gives us a total of, okay, just to do a quick check, okay, 6,000 ringgit a month, sorry, per year, okay, and our accounts close on 31st December, okay, this December, okay, so how many months is that? Okay, so this is the first month, second, and all the way to 7 months, okay, so we just total the amount. So it gives us 3,500 ringgit. Okay. Now, it hasn't said it doesn't say anything about the interest has been paid. So we have to assume that it's not paid yet. So in this case, debit interest, in this case, interest expense is an expenses. So we want to record the expenses. Expenses will be debited. Debit interest expense 3,500 ringgit, only 3,500 ringgit because, okay, um, yeah, it hasn't been paid yet, okay, because from June until December, this is the period, the amounts to be recorded in this year's account, okay, so maybe interest expense 3,500 ringgit, and then we credit interest expense payable 3,500 ringgit. Okay, interest expense payable is a liability, so it makes sense that it is on credit side. All right, so that's it for question number 2. Now, let's proceed with question number 3. We're still adjusting entries. Can we do question number yeah, let's do question number 4. Okay, number 4 is ledger entries. Okay, now let's use this same sheet. Mm, okay. Refer to question number 4. The unadjusted trial balance of Bright Enterprise on 31st December 2008 shows the following. Okay, so we have a bunch of accounts there. Commission revenue is a revenue. Unearned rent revenue is a liability. That's why it's on credit side. Okay, you might want to take a note there. Okay, interest expense is an expenses. Prepaid advertising expense is an asset. Okay, now let's look at the adjustments. Okay, there are 4 adjustments each for those 4 accounts. Okay. Next, required prepare ledger entries by taking into consideration the above adjustments and showing a transfer to the statement of profit or and loss. Profit or loss, sorry. Okay, the right name is statement of profit or loss. Those with old textbook, okay, you have to know the proper name. Okay, because that is the wrong one. Okay, now, firstly, what we need to do is we have to open all accounts. So I need 4 more accounts. Okay, so I hope you can see this. I'm not sure. Okay, firstly, let's open commission revenue. Okay, we're going to open all these 4. Okay, commission revenue is look at the question. It's on credit side, and if let's say the question doesn't give you debit or credit, okay, you have to know by yourself. Revenue is a credit account. Okay, so it should be on credit side. So here, this would be what's the date here? Is there any dates? Oh yeah, 31st December. Okay, 31st December, balance BD. Okay, why balance BD on 31st December? Because here this is unadjusted trial balance on 31st December, and this is unadjusted. So it becomes, although it is at the end of the year, it becomes balance BD still. Okay, so here 1,000 ringgit, and then just open everything first for now. Unearned rent revenue. Unearned revenue is also on credit side, okay, because it is also a liability. 31st December, balance BD, 7,800 ringgit. Next, interest expense. because it is an expenses. Okay, so it's debited. And lastly, we have prepaid advertising expense. Okay, which this is a prepaid expenses and asset. Okay, so it is also on debit side, 6,000 ringgit. Right? So we have opened all four accounts. Next, what we need to do is we need to make the adjustments. Look at the adjustments. Commission revenue earned for the current period is 1,100 ringgit. Okay, we have commission revenue. This is the amount that we receive, 1,000 ringgit. That we already record, 1,000 ringgit. Okay. Next is it says that the amount that we actually earn. What does it mean that we actually earn? The amount that we are supposed to receive. The amount that we are supposed to record is 1,100 ringgit. Okay. If the amount that we are supposed to receive is 1,100 ringgit, but we only receive so far is 1,000 ringgit. Okay. So now it means we are short with 100 ringgit. So we have to add this. Okay. So how to add this? This is a credit account. To add, we also need to credit the account. Okay. So here, 100 ringgit. This become commission revenue receivable. Okay. Commission revenue receivable. Okay. Alternatively, if you don't think that this reasoning is friendly to you, okay, let's look this from another perspective. Okay, it says that commission revenue earned for the current period is 1,100 ringgit. It means that the amount that we are supposed to receive is 1,100 ringgit. As I mentioned earlier last time, the amount, the word suppose, okay, supposed to receive, supposed to pay, that is represented by SOPL. Okay, so in commission revenue, this is a revenue account. SOPL is used to close the account. Okay, so let's close the account 31st December, SOPL. Okay, and the amount that we are supposed to receive is 1,100 ringgit. Now we can close the account. Okay, so let's close it. 1,100 ringgit. 1,100 ringgit. So there is a missing figure. This is 100 ringgit. This is where it becomes commission revenue receivable. Okay, same exactly like the previous we did it. Okay, so now that we have commission revenue receivable, so we have to open it. Commission revenue receivable. Now let's do a quick check. It is a revenue receivable, which means someone else owe money to us. So that is an asset. Okay, you don't have to label it, okay? But this is just for an explanation to you. So here in commission revenue, it is on credit side. So in commission revenue receivable, it will be debited. Okay, commission revenue, 100 ringgit. Okay, so it fits the nature of the account. Debit side to increase, which is the assets account. Okay. Now we can simply close the account. Balance CD, 100 ringgit. Okay. Then 100 ringgit. 100 ringgit. DCP, 100 ringgit. Balance PD. 1st January. Is it December? Yeah. December. Okay. So that's number one. Okay. Next, number two. Rent revenue earned during the year amounted to 7,200 ringgit. So from this unearned rent revenue, 7,200 ringgit has been earned. What does it mean? It means that it doesn't become unearned anymore. So if it doesn't become unearned anymore, do we have to add or do we have to minus? We have to minus, right? It doesn't become unearned anymore. It's not unearned anymore. Okay. So in this case, we have to take it out. So to take it out, we have to debit. Okay, 7,200 ringgit. Okay, the date is 31st December. Okay, so what's the particular? Just remove the word unearned, so it becomes rent revenue. All right, now let's close the account first before we move on to the other double entry. Okay, 7,800 ringgit, 7,800 ringgit, and this is 600 ringgit. Okay, balance CD. Then we have 1st January. Oops, 1st January balance PD 600 ringgit. Okay, that's it for our unearned rent revenue account. Next, let's open rent revenue. Okay, look at the account's name, revenue. So it is a revenue account. Revenue is credited. Okay, so you see here, this is the entry, right? This is the entry. Okay, so this is debit. By the way, let me just highlight that all those entries. Okay, see here, this is debit, so it should be credit side. 31st, 12th, okay, unearned rent revenue, 600 ringgit, right? Okay, let me highlight this. Sorry, not 600, 7,200 ringgit, right? And then we're going to close the account, 7,200, 7,200. Oh, yeah. Maybe close with SOPL, 31st December. Okay, next. All right. Interest expense payable was 150. So we have interest expense account, and it says that interest expense payable. What does it mean payable? It means that we have to pay. Okay, it's not paid yet. We have to pay. So we have to add or minus? We have to add, right? Okay, so interest expense will be added on debit side, right? So here, um, particular is interest expense payable. Do we have enough space? Okay. Right. And how much is it? 150, right? 150. And now let's open. Wait, I want to highlight this. Let's close the account, this account first. Okay. It's 1,700 and 1,700. Okay, 1,700. This will be SOPL 31st December. Okay, so now let's open interest expense payable. Okay, payable. You see the word payable, it is a liability. Okay, to record in a liability account, it should be credited. Okay, we want to increase the liability account. Okay, so 31st December, interest expense, 150 ringgit. Okay, and we're going to close the account immediately. 150. Then we've got 150 here. This would be the balance CD, 31st 12, and then bring it to the next period. Balance BD, also 150, right? 150. Okay. Okay, you see? That's it. And the last one, 3/4 of advertising costs is apportioned as an expense incurred for the current period. What does it mean? It means that this 6,000 ringgit, the existing 6,000 ringgit prepaid expense is apportioned as an expense. It means that it has expired. Okay, so we have to take it out. 31st December, it becomes advertising expenses, only 3/4 of the total amount. Okay, 3/4 of 6,000. Okay, so we got here 4,500 ringgit. Okay, so let's close the account first before we open the other account. 6,000 ringgit. Okay, so this gives us 1,500 ringgit. Right, next is the balance CD. 900. Balance BD, 1st January. All right, next, advertising expenses. Okay, so this is on credit side. So in advertising expenses, it will be debited. Okay, prepaid advertising expenses, 4,500 ringgit, like that. Okay, and now let's close the account properly. Okay, because it is a requirement in the question to close the account to SOPL. Okay, so 31st December. All right, that's it for the four accounts. Okay, so we have recorded for all four accounts. Next is to record in the statement of profit or loss. Okay, so again, a very important reminder, never ever take the title for granted. Okay, this is supposed to be a free marks for you. Okay, so firstly, Bright Enterprise. Statement of profit or loss, uh, extract for the ending berapa? December. It. Okay, sorry. Okay, now let's look at our accounts. Okay, we have revenue account, okay, 7,200 ringgit, and we have advertising expenses, 4,500 ringgit. We only take the accounts, the entries with SOPL name. Okay, look at this. Okay, there is no SOPL, so ignore this. But here there is an SOPL. Yep. Okay, commission revenue. And here we have rent revenue, SOPL, right? Then we have here is uh, interest expense. Okay, so we have two revenue, two expenses. Okay, so let's record this properly. Yeah, we don't have to total them because this is just an extract, right? Um, other revenue. In other revenue, we have commission revenue amounting to 1,100 ringgit. Okay, make sure you take the correct amount, yeah, the amount that goes to SOPL. Okay, 1,100 ringgit, and then we also have rent revenue, 7,200 ringgit. Okay, rent revenue, 7,200 ringgit. Okay, so we have the revenue, and then other operating expenses. Under other operating expenses, we have two accounts as well, two expenses. Firstly is interest expense. Okay, again, reminder, take the one with SOPL because this is where it goes. Interest expenses, 1,700 ringgit. Then we also have this one, right? Advertising expenses, 4,500 ringgit. Advertising expenses, how much was it? 4,500 ringgit. Okay, so this is our statement of profit or loss, the extract of it, by the way. Next, we're going to open a statement of financial position. Okay, statement of financial position. Okay, firstly, we have this one. Okay, you look at the balance BD here. Okay, balance BD on debit side means it is an asset. Okay, so firstly, okay, for your reference, they all belong either in the current assets or current liabilities. Okay, only these two classification. There is no non-current assets or non-current liabilities for any of the items in these questions in this chapter. Okay, so in this case, commission revenue receivable 100 ringgit. Okay, commission revenue receivable 100 ringgit. Now, why do we put it in the asset section? Because the balance BD, focus on this balance BD, okay, on the debit side, right? Whereas if the balance BD on the credit side, this is liability. Okay, so unearned rent revenue 600 ringgit is under current liability. Unearned rent revenue. Okay, 600 ringgit. Okay, unearned rent revenue. See here, unearned rent revenue, the balance BD. We take the balance BD here. Okay, next, interest expense payable also on credit side. Okay, so this makes the account to be liability account. Okay, interest expense payable 150, interest expense payable 150 ringgit. And lastly, we have our prepaid advertising. Okay, prepaid advertising expenses on debit side, this would be current assets. Prepaid advertising expenses, okay, 1,500 ringgit. All right. So, yep, I think that's it. Okay, this is it for our for question number 4. Okay, that's it for question number 4. How long is it already? So, 50 minutes. Still, I think that's it. Okay, because I plan to have each session to be approximately 50 minutes to 1 hour, slightly less than 1 hour. Okay, this is to meet our 2 hours class requirement. Okay, so that's it. Chapter 7. Next, we're going to continue with chapter 8 in a separate recording. Okay. Um, do you need this? I don't. Do you need this? I will. I will give you the answer later. All right. Okay. Thank you. Where is this one? Um, stop recording.